Today, I'm gonna be discussing about the top 10 things that are holding you back from succeeding in forex trading or in trading in general. Those are things that are literally holding you back from succeeding in the markets. Let's take things from the beginning. Let's say that you are a beginner trader. So, as a number one, I'm gonna just put down starting trading for the wrong reasons. If the base is not correct, then nothing else is going to be correct. Meaning that if your purpose for starting trading is to become rich instantly, then whatever else you try to do, you will certainly fail. So, correct reasons for somebody to be starting trading would be independency, financial freedom, having more time with his or her family, the love for statistical analysis or the love of backtesting and perfecting a certain trading strategy or even many trading strategies. And those are also things I'm gonna be discussing for our later things that are holding you from succeeding in the markets. So be sure that when you start trading for all the right reasons and not in order to become rich. This will bring me immediately to the second reason why you are not succeeding in the markets. And the second reason is falling for trading scams. There is hundreds and hundreds of forex channels out there and trading channels in general, and what you might be seeing from the majority of those people is posing with fancy cars, with great houses, supposedly living the perfect lifestyle as we might be thinking about it, but all these things couldn't be farthest from the truth. The truth is that all of those things are just scams. The only way somebody could afford this kind of lifestyle would be if he or she would have already been rich beforehand. Trading is not the place for those people who want to get rich quickly, and you have to realize that, which will bring us to number 3 instantly. Number 3 is the realization that you need a lot of money to make a lot of money. If you're over leveraging a small account, let's say 10,000 euro account, and you get into this magic trade with a 2 pip stop loss and you risk your whole bankroll, then you might indeed even make, let's say, $1 million out of $10,000. But the odds of this happening are very, very, very small. And in case you are a gambling person, which I do not suggest at all, do not do that by any means, but in case that you are one of these people who stand lucky the first trade and they indeed make this 1 million, be sure that you are gonna be repeating this same behavior, which is a gambling behavior, and you are gonna be losing this whole million that you have made, plus more and more money. This is a guarantee, so forget about it. Personally, I'm just risking 0.4% of my whole bankroll in every single trade. This means that you need a lot of money to make a lot of money. If you have a 1 million trading account, 0.4% of that is $4,000. So of course, by having great risk management with a $1 million account, if you win a 10-to-1 reward to risk, you just make $40,000, which would be considered a medium to high salary with the Western standards. But if you have a $10,000 account, by risking 0.4% of the account, then you risk $40 per trade. A good example of a 10-to-1 would only make you $400. Now I will go to number 4, the fourth reason why you are failing to succeed in the markets is that you learn from the wrong people. And of course, this comes very close to number 2, which is falling for trading scams. When I say that you learn from the wrong people, it might be a combination of 2 things. Number 1, all of those people that we talked about that are posing with fancy cars and are giving you the wrong impression about trading. And number 2, or the combination of the 2, people who really do not know how to trade. And this means that they do not have a profitable trading strategy. A profitable trading strategy would be the one that would be giving you an advantage over the markets. The markets are a very tough place to be in, and strategies that make it marginally into profit when back tested are certainly gonna just break you even in the real markets, or even less, they are gonna make you lose money. For example, if you want to learn about institutional trading, you can just join my premium community by clicking on my links either down in the description or the pinned link in the comment section. I teach you the best trading strategies using institutional order blocks, strategies which have a statistical advantage, and in the long term, if you do things correctly, you will be very happy that you will have made the decision to enroll into my premium courses. A fifth thing that is keeping you from succeeding in the markets would be your own psychology. So when it comes to trading, psychology is one of the most important factors, if not the most important factor. If you are not ready to take this journey, this is a guarantee that you are not gonna be succeeding in trading. And this will bring me instantly to number 6, which is trading a strategy does not go hand in hand with your psychology and temperament. Let's say that you are a person who is not able to wait for a long time for a certain result of a certain trade that he or she has placed. Then if you just use, let's say, the daily time frame in order to enter trades, you must wait for days and days, sometimes even weeks, in order to hit your target. This is something that you do not want to be doing. A person who wants to be in and out of the markets the whole time, of course based on a certain trading strategy, has to use a strategy which is best for them. So a scalping trading strategy on the 15 or 1 minute time frames would be the best for a person who loves action, but at the same time loves action which gives him or her a certain statistical advantage. On the other hand, somebody who is laid back and just wants to be placing trades when he sees the opportunity on a larger time frame without even scaling down to lower time frames, he or she can use the daily or the 4-hour time frames, and they do not need to engage into scalping or any day trading strategies. 7th thing that is holding you back from succeeding in the markets. And do not get mad at me for saying that, but probably you are just lazy. What do I mean by that? You are not putting in the backtesting hours needed in order to perfect a trading strategy and in order to get yourself familiar with a certain currency pair or with a certain trading strategy. Watching a trading strategy from a forex educational channel such as mine means nothing, absolutely nothing, even if you enroll into my premium community, if you do not go ahead yourself and backtest those same strategies, and if you do not get your own results. So stop asking others about the winning percentages of a certain strategy, go ahead, do the work on your own, get your own percentages on the currency pair that you want to be trading. 8th reason that is keeping you from succeeding in the markets: lack of understanding of statistics. You have to have a passion for statistics when it comes down to trading. This does not mean that you have to learn complex statistical formulas or anything like that. Everything is being done automatically. You just need to understand basic statistics and how to use them quickly in your head, or how to quickly put those statistics into a certain trading program. There are a bunch of them for free online, so that you get as a return what you have to be expecting statistically with the numbers that you just gave the system. And this will bring me instantly to number 9, not being patient about a certain strategy. If a certain trading strategy has given you adequate results, and if you have placed those numbers into a statistical equity curve simulator, and it is giving you a statistical advantage over the market in the long run, then you just have to be patient. It's the only thing that you can do. Keep following the same thing again and again and again, and just be patient until your strategy gives you the statistical advantage that your backtesting has shown you until now. And immediately we will go to number 10, very important thing. this is certainly keeping you from succeeding in the markets, and it is making you engage into gambling activities. This is risking too much of your capital. So as a rule of thumb, I'm always saying that risking more than 0.4% of your account can have detrimental consequences, and the only reason for that is that most of you out there will not be able to take the consecutive losses in case that you are trading with 1% or more of your capital. As an example, if a certain trading strategy can give me, in the worst case scenario, 13 losses in a row, by risking only 0.4% of my balance, this will be a 5.2% drawdown. On the other hand, if you are risking 2% of your account, the 13 losses in a row will give you 26% drawdown. This is absolutely huge. Of course, you could recover from both given the fact that you are risking the exact same amount. Theoretically, the statistics of a winning trading strategy are gonna play in your favor in the end of the day, but how many of you are gonna be able to bear the discomfort that a minus 26% of the whole bankroll is giving you? I cannot, and this is why I'm trying to keep my risk per trade only to 0.4%. So this is it, there you have it, top 10 reasons why you are not succeeding in the markets, why you are losing money in trading. Again, if you want to learn the best trading strategies out there, go ahead and enroll into my premium server, where I teach you the best strategies. I'm talking about psychology, advanced statistics, and also I'm doing weekly and daily analysis, and also analysis per request, which means that whatever you ask me, I can do the analysis with the initial price that you have already paid without charging you an additional cent. Be sure that you like my video and subscribe to my YouTube channel. Turn on the notifications bell, you don't want to be missing out a single video. This is gonna do it for today. Thank you all for watching, until next time.